Hello everyone, let's look at Nifty again for the weekly wrap. Just before we start, please note this is for education purposes and not investment advice. Do read the disclaimer. Let's get on with this. When we look at the Nifty, right now with all that's happening in the market, Nifty is actually rallying. But you see these rallies, the way it's happening, you see these small short candles. There's something important that's actually happened right now. An important indication has just formed on the Nifty on the 1st of September, on the 2nd of September when we were trading yesterday. I had been talking about this constantly since the last couple of months actually, that Nifty is going to go ahead and indicate and the start of an overbought zone very soon. What does that mean technically? What that means is that the Nifty is telling us that this is the beginning of the market entering a phase where it is overvalued, right? Now, people might disagree with me and say Nifty is way overvalued already or not really, and so on and so forth. That's their own analysis. I have my own way. It's worked for years, and when I tell you that it is indicating an overbought zone, it has always been right. So that's what the Nifty is doing right now. Indicated to us that it has entered an overbought zone. Now, what does this overbought zone consist of? There are a couple of rules to it. Right? So the Nifty being in the overbought zone does not mean that it's going to top. It's an indication of a top coming. That top can happen right now or in the future, but it is definitely closer to a top than it has ever been so far. So none of these indications that you're seeing here have been indicators of tops. Like in my last video, I've clearly explained how these zones work that I've marked out here and how these zones have become crucial support centers for the entire market. Now, in the same way, this is also going to be a zone of support and resistance for the Nifty. One of the first things that the Nifty has done now is to give us a level at the bottom of this candle to tell us that it's become a zone of support plus resistance. So we've already indicated that. We talked about it last week as well. It was a preemptive prediction and it worked exactly the way we planned to. 24880 is definitely the bottom of that zone right now. And depending on how the Nifty moves, it may form a zone around 25,000 or 25,100. I say that because the Nifty's zones are in the range of 600 points on an average. So 575 to 625, 650 points. So 600 on an average is the range that the Nifty is forming these zones in. It's the nature of the script. Every script has its own nature. When you're analyzing it, understand that the script is like a breathing, living thing because it is a collection of market sentiment overall and market behavior. So price performance is almost like a breathing, living thing. So when you look at it from that particular script's perspective in terms of what ranges does it make generally, what averages does it follow generally, your targets, your stop losses, all of those are going to be much more clearer. So for example, for Nifty, the support and resistance zones are going to be around a 600 point zone. So what Nifty has done now is actually quite interesting, and we'll try and map out some new levels now because all of these levels have changed quite drastically. We've got some new indications from the Nifty that are going to be really, really important for us in terms of analysis. Right. So one of the first thing that Nifty has done is formed two zones that we talked about over the last couple of weeks at least. And I've had a very detailed explainer video about this, telling you what those zones are, what to look out for, and so on. So I'll just post those levels so that you have them just for your note. So you've got these two specific levels that have actually formed on the Nifty over the last couple of months or so. So let me just post that quickly. So these are the levels that we should be looking at on the Nifty as zones of interest, right? So if I draw these out on the chart as well, so you've got 22,497. I'm not going to round them off. I'm going to do the exact same numbers so that we kind of get a clear, crisp idea of what it is. Doesn't make much of a difference, but it's okay to go by the market. Rounding off results to a lot of these micro errors and then observations that are slightly laggy and saggy. So we're better to avoid that. So you see how this zone worked out. Right? I talked about this little box here, how it formed that zone. It indicated it well in March, and then the entire market followed that, including this massive candle that we saw on election day, results day rather. So that went down for a while. Then the second zone that I've just put numbers up are 24461.05. That falls right there. And the bottom of that is 23985.80. Right? I've given you an approximation here. This is another zone that had actually formed as well. So let me just move that to the right one. Here it is. And you see that happening now. Now the third zone that is formed on the Nifty is starting here, 24880, this yellow line here that I've posted. And this is going to go up to about a high of 25375. So it's not an exact, the market will actually tell us that. The market's hit a high of 25333 so far, 25375 and higher. I see it go much higher as well. But this is going to be a very important zone of interest. The market has to sustain above this. Not sustaining above this will put the market in a bit of a soup, in a bit of a rut where it might go sideways for a little while, trying to establish another zone of interest where it can actually build up momentum. Like, for example, this, right? Came into the zone around February and March, stayed there until June. June is when it started running. So somebody might say, oh, it was just the election, but it depends on how the price wants to really carry on things, right? So 3 months of nothing really, just sideways action. Great opportunity to buy on dips, but if somebody doesn't know the zone, there is no point. They wouldn't really be able to predict that, right? So that's how that's going to work. Similarly here as well. So 24,880 and 25,375 are going to act as very, very important levels to look out for. And the Nifty is definitely going to function within that range and use that range to build momentum. If the Nifty breaks through this very strongly, I would be really happy to see that momentum last. But currently, given the way it's broken through the last resistance zone, it's not really strong. There is a lot of profit booking that we're seeing, and that's valid given how far the Nifty has come. But at the same time, it's important to remember that the Nifty does have momentum built in it, still alive. So you might see a lot of push and force coming into the Nifty from here on if it breaks through that zone and uses that zone as a support level. Now, going forward, even in the future, doesn't matter if it's 2 years or 10 years down the line, remember that 25,375 to 24,880, midpoint 25,000 is going to be a very important support level. Now, if the Nifty lasts above this, and given the fact that the Nifty is moving from here, you will definitely have to see some base building here to sustain 30 and well above that. So another 5,000 points to come. That 5,000 is going to come with a lot of effort from this particular area. In the short term, the Nifty is indicated that it wants to function in the range of these three candles here. So these three candles here with the top of the same top, 24,880, and the bottom of about 24,210 have indicated that any movement out of this is a bullish move. So meaning that 24,880, as soon as it breached it, in terms of day traders, it has started moving up. Before that, it was buy on dips to around 23,985, but it was not a hold until it broke 24,880. When it broke 24,880, it indicated that it's going to keep going up. Now there's a 600-point range as a day trader that you would watch for, or a day trader or a swing trader that you'd watch for, that you'd hold on to. That 600-point move is going to be 25,375. If there are dips, buy in favor of that up move. For now, it is still indicating a top formation or an overbought zone. It does not mean that it is done with its run. So it's important to remember that indications don't mean confirmations. Confirmations follow indications. Indications are zones of high interest. Confirmations are zones which tell you that this indicator is going to be successful. So you've got to separate those two, make one accountable for the other, make one confirm the other. And that is when you'll see success in terms of achieving high returns and also ensuring that you're taking the right moves. So for now, it's still buy on dips I see on the Nifty. That's how I'm going to function on it. Plus, I'm going to look out for an opportunity, and I'm really excited to see that the Nifty is going to be close to 30,000. I hope you are too, and I hope this video was really helpful. Please do like and subscribe and share this video. Let me know what you would like to, and thank you so much for watching.